Hello and welcome to the stock specific class here for Wednesday, June the 2nd. Not much has changed from yesterday's update. The markets are pretty much flat to slightly downward. The indexes are flat to slightly downward. What it appears is it appears the market's waiting for some sort of news to trade on. I've talked about this a number of times that traders need a reason a lot of times to buy or sell. It doesn't really matter if that reason makes sense. It's just something that can justify their action. In this case, with the market showing a lot of bearish reversal type formations, it looks like the market's leaning towards waiting for a negative. It's some sort of negative news, some sort of reason to sell. And I don't know if I mentioned this yesterday, but there really isn't anything that's happened. There's not a lot of news out there right now that would be reasons to buy or sell. There is a jobs report, though, that does come out Friday. And what I'm anticipating is that the market is going to react to that jobs report. Now, the last jobs report that came out was really negative, but the market didn't drop on it. And so it might be that it's looking to see if this one is appearing negative as well. If that was just if the last month's jobs report was just a anomaly or something like that. But again, without knowing anything else that I can anticipate could trigger the market to buy or sell, that's what I'd be leaning towards. Now, it could be that jobs report is really good and the market rallies off of that. So, but the bottom line is that the price action is negative right now, looking like the market's going to drop, but it's not dropping significantly. And so, when that happens, you just assume that the market is waiting for a trigger, waiting for something to a reason to buy or sell. As far as the direction alerts, nothing's really changed from yesterday. It is showing still a tired market with sentiment right here. You can see a little bit more clarity now. Sentiment is above momentum, and momentum is above breadth. That indicates just a tired market, and we already know that. We've talked about how the market has been kind of stagnant for the last little bit here, and now the indicators are kind of showing that. We're still in kind of the buy range for momentum, breadth, and sentiment. Nothing's changed there. As far as the buy-sell ratios, we have widened out a little bit more than we were yesterday, but not really an extreme level where you'd assume that we're overbought. Sentiment is creeping closer to that extreme level, but not quite there yet. As far as the individual charts, this is what you can see. You can see this. So yesterday we talked about how this is forming a bearish reversal, and it was right at the previous high right here. Now, I've gone back and forth on this because, again, when we talk about analyzing price action, analyzing the charts, we're talking about probabilities, and sometimes what you get is you get mixed signals. You have a bearish reversal right at a previous high. It could be a double top right here, and you could definitely drop off of that. But a lot of times if this was the start of a move down and this was the correction, this was ABC patterns don't typically retrace 100% of the move. They don't come all the way back. They retrace partially. So, when you're in a downtrend, in fact, the rule of thumb is that you'll tend to retrace about 50% of the move. So in your correction right here, you will tend to retrace 50% of that that move down. Okay. Now again, that's the rule of thumb. Sometimes it can be a little bit shallower than 50%. Sometimes it get a little bit deeper than 50%. Usually it's not more than 61.8%. That's a Fibonacci level. But so when if you're coming all the way back, typically when that happens, you're going to be breaking out. You're going to move higher. So this is the mixed signal. You're getting a strong bearish reversal, but from a probability standpoint, typically on this deep of a retracement, you'd be breaking out and going higher. It wouldn't be a retracement. You'd be breaking out and going higher. This would be part of a trending move going to a higher high. So, the lower probability outcome would be for the market to drop right here, but that's what the near-term price action is suggesting that. So, bottom line is, I'm trying to explain why I'm mixed here. I don't know what's going to happen here. It's really uncertain as to whether we're going to get a breakout move higher. It'd be easier if we were seeing more bullish candles right here, right up and bumped up against this breakout area. We'd assume that we're going to break out higher. Now we have moved a little bit sideways through here. Aside from yesterday's kind of gap up, it's been more sideways. Typically, when you're moving sideways, you want to pay attention to the direction the market has been moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. But there again, we're seeing bearish price action right there. So the bottom line, when you see those mixed signals, you don't want to be overly aggressive in your trades. You don't want to be I don't want to be loading up too much from the bullish side, because if you just wait for it to break out, there's your confirmation. There's your confirmation that the indexes are moving higher. That will give a greater probability for my individual stocks to move higher as well. On the other hand, if it is going to sell off, you don't want to be buying in right when it sells off, because you could get in at cheaper prices if it were to pull back a little bit more. So that's where we're at. Like I said, I would assume that this is going to it's going to show itself probably by Friday. I would assume by that jobs report. Either it's going to break out or it's going to have a pullback. Even if it sells off, I'm not anticipating a deep sell-off. Well, I don't know. If this was the start of a bigger move down and this was a bearish ABC pattern, then yeah, you're expecting a move down probably into this area right here. Actually, probably back to this previous high right here, or breakout area right there. And then maybe we move higher from there. It could be that this is a flat ABC. This is wave A. This is wave B. A flat ABC, wave B will end right at the beginning of wave A, and wave C will end right at the end of wave A. That would be a shorter sell-off. That's still a pretty decent sell-off. It'd be similar to what wave A did back here. And then we'd move higher. And it's possible that was the correction, and we're just moving higher here. Maybe it's just a real shallow pullback, and then we break out. But I think it'll be clearer by next week, because I think the whatever the big move is going to happen probably on Friday with that jobs report. Either way, it could break out, it could drop. So I'd be patient if I were. Well, I am with my trades. I'm kind of waiting for a little bit more certainty here, and that's the hard part sometimes is to wait. But sometimes the best trading decision you can make is not to trade. That being said, we can jump into our. I'm going to go and recommend stocks. I'm going to take a look at stock. Well, again, most of these we're waiting for a buy signal anyway, so I don't have a problem a lot of times doing, talking about market conditions being uncertain and then going right into talking about individual stocks, because, like I said, a lot of times we're waiting for confirmation, and I promise you, if we break out a lot of those stocks are going to go to buy signals, and they're going to be ones that you'd want to be jumping into if it breaks. If not, if it pulls back, a lot of those stocks are going to remain hold in their hold patterns. Although some of the ones we're talking about today do have buy signals, but there again, we can also discuss additional confirmation you can look for, going to a higher high or something like that, and you can factor that into your decision on what you want to do. The VIX was moving up a little bit yesterday. It's back down a little bit today, but that's something we want to keep an eye on as well. You'd expect that to spike up with any sort of sell-off. It is already at a pretty low level, so when you start to see it very low and you start to see bearish reversal formations, that could be a sign that it could start to spike, meaning that it could confirm that bearish price action. By the way, the trading we're going to get into today, after I go through these specific stocks, is going to be the 3 black crows candlestick formation. It's the opposite of the 3 white soldiers that we talked about yesterday. If you want to review that, if you missed that class, you can go review that recording. And this would be the bearish version of that. Was the bullish version of the pattern. The 3 black crows is the bearish version of the pattern. We'll go over that as soon as we're done with the individual stocks. Let's go into our sectors now. I'm going to just review a couple that we went through over yesterday. Under transportation, I went over rail, RAIL. Freight Car America is the company. Let's switch this to signals. And the reason is it went to a buy signal. Well, it could be going to a buy signal today. Remember, there's still a couple hours before the market closes. That could change, but the way it looks right now, it's going to a buy signal. I like the fact that it held kind of a double bottom down here. You do have a little bit of a possible double top up here that might have to break through. But it looks like it would probably break out on this next move if it continues to head higher right here. It would probably end up breaking out at that point. These stocks are doing very well with the economy heating up. A lot of the rail stocks and transportation stocks are doing pretty well. Another one we talked about yesterday was this ESEA. This one hasn't gone to a buy signal yet. Now, if you remember on this one, I was talking about it's possible this was the ABC correction that's moving up from here, but it's also possible that this was wave A. This sideways move is wave B, and it has maybe one more move down for wave C. But there again, we're waiting for it to see if it goes back to a buy signal and see if it can break out above this kind of sideways price action right here. That might make it more likely it can go up from there. It's very close to going to a buy signal. And remember, if you remember yesterday, rail was pretty much in the same spot. So it didn't take very much of a move higher for it to trigger that buy signal. So again, you can use this little slide bar up here to see how close you are. If you get a whole signal and you're all the way over here, you still probably have a little ways to go before it triggers that buy signal. A lot of times I like to see it at least right in the middle. You're pretty close, or to the right side of the middle. But that can help you a little bit if you want to. If you're curious to know, well, how close am I? You just come up here and you can kind of see how close that is. Another one we went over yesterday is under retail. Actually, we have to look under the buy signal because it went to buy yesterday. But Jumia, 96 strength rank. It went to that, but this is still early in the buy signal. And again, you could wait for it to break out to a higher high right here. What I was liking about this is that you have this downtrend. It looks like it might be rolling back over. I love to find stocks that are kind of moving up on the right side of a bowl-shaped move. If you want to get into stocks early in their uptrends, that's a behavior. That's an early reversal behavior that you can start to see. Now, is it possible that this is just another lower low? It's still a lower high. Excuse me, lower high right here. Could it roll over and drop and go to a lower low and continue that downtrend? Absolutely. But the fact you're getting a buy signal here, and if you were to go to a higher high right there, it would be one of those first little clues that you could be reversing a trend. The reason why I like these as well, when you have these deep reversals, is you also have a target. You have the previous high as a target for that stock to work its way back towards. Doesn't always get back up there. You know, if it was that easy and stocks would always get back up there, then we'd all be gazillionaires. But you know, that in this case, that's a double. You know, from $30 level up to $70 level. There's that potential there for a pretty big move if it starts to recover. That's the reason why I like this stock. This is kind of the Amazon.com of Africa. Now, I know we don't look at Africa as being a Everyone hear me now? Can everyone let me know if you can hear me? Is anyone here? Can anyone hear me? Just wait for someone to type in if they can hear me. Someone, let's see here. Okay, good. Okay, the audio is back. I don't know where it cut out. Sorry, it took me a second there to realize the audio was gone. That hasn't happened in a very long time. So um, I don't know where it cut out. We were talking about Jumia here, though. This is a stock I've liked for quite a while. It looks like it's kind of turning the corner here. This stock is kind of the Amazon.com of Africa, and I know when you think of Africa, you don't think of it as being think of it as kind of a poor nation, and maybe not being able to afford to buy a lot of stuff on Amazon, but they're finding a way to. They're kind of using the same model of Amazon to try to make it easier for particularly the cities in Africa to be able to acquire products just like you would on Amazon.com. So there's a lot of potential there long term for the stock. One thing I did here that might have missed when the audio went out is I went to a little bit of a longer term chart here. And what I was pointing out on this is that you had this larger bowl-shaped move that ended up really taking off last year. I traded this stock a lot last year, and there's also a shorter-term move right here. Here's a little bit of a bowl, what we call a cup with handle formation. We have the cup, a little bit of a handle right here, and then it broke out. What I always tell people with cup with handle formations is that, one of the rule of thumbs on a cup with handle formation is you can take the distance from the top of the bowl to the bottom of the bowl and project that distance upward. That gives you kind of a minimum target of where that stock might go. And you can see here when it broke out, it really shot up. It went a little bit higher than that distance, but then what did it do? It pulled back from there. And this might look coincidental that it pulled back pretty much right at that distance, but I'm telling you, this happens all the time. Something doesn't become a rule of thumb because it happens only a few times. It happens a lot, and so and again, I didn't make this stuff up. This is something that any chart technician will look at and use. And I bring it up all the time when I see these types of patterns. Same thing as with the inverse head and shoulders pattern or something like that, or a triangle pattern, or a trading range that you break out of a trading range. You can use that distance of the top and the bottom, project it forward, and it gives you kind of a minimum target of what to expect. Now, what makes this rally in Jumia a little bit different than some of these other ones? You can see right here, this looks like a little bit of a V-shaped move, and then it went lower. Well, look how they were retracing the previous move about 50%. This retraced this move down about 50% and dropped lower. This is a little bit of a shallower retracement. This was about a 50% retracement. But notice how this one's come all the way back up. So it's a deep retracement, getting a buy signal, and it's about to go to a higher high. I think this is, if you want to get into potentially the early stages of a new uptrend, that's what it looks like when you're in those early stages. Now, again, there's no guarantee this is going to go back up to that previous high. But again, if you've ever been that person that, you see a stock, it's gone up real big, and you're like, man, how come I can never get in down here near the bottom? Well, because it's not going to look great at the bottom. You got to learn how to recognize those subtle signals that it could be turning the corner and starting to move back up. All right, those were the stocks that I talked about on on yesterday. Let's take a look at some newer ones. Let's go under industrial products. And I was looking at this top one here, TWI, 97 strength rank. Again, potential there that this is a little bit of a kind of a bowl-shaped move. When you get these kind of rounded type moves, they tend to be a little bit more bullish, especially as you get to the right side of it. What's the difference between, how do I know this isn't a correction for another move down? I don't know for sure, but typically corrections tend to be sharper. So if this rally was setting up for another move down, it would tend to look more like you'd usually get a sharp move up for wave A, wave B, wave C. It would tend to be more choppy and more sharp to the upside. That first move would kind of form a V. This is really kind of a rounding type move, which looks a little bit more like a bottoming formation. But to be honest, that being said, it doesn't rule out this thing couldn't have a drop lower. It's definitely still possible, but usually that round, when it looks a little bit more rounded like that, it tends to be more of a bottoming type move. We're waiting for this to go back to a buy signal anyway, so that'd be good confirmation. It has a little ways to go, as you can see right here. It just barely went to hold. So we'd see it come up a little bit more before it went to a buy signal, give a little bit more confirmation anyway. Now, the rest of them I like in the sector and industrial products is they're in the buy section. I went and looked under the buy signals because some of these, they might have barely gone to a buy signal. One that we pointed out in the stock-specific class recently is Plug Power, PLUG right here, 97 strength rank. Look how this is very similar to that Jumia chart where you've had this big pullback, and again, what stands out to me here was the previous lower higher. It's gone to a higher high right there. It's very slight, but it's gone to a higher high. So here you had lower high, lower low. That's what a downtrend does. Then you've come all the way back, and notice again on these corrections within the downtrend, they retraced partially the move lower. Here was a move down. It retraced. The rule of thumb is about 50%, but it can be less than 50%. It can be about a third. 50% would be half. It could be a third. It could be about 3/4. Actually, it should be a little bit less than 3/4, but should be pretty close to that 50% is what you look for. Here was a move down right here, and it retraced a little bit deeper, a little bit more than 50%, but about 50%. That's why we say about 50%. But here was the last move down, and it's come all the way back, and it's gone to a higher high. So very quietly, very subtly, it's showing that it could be turning the corner. And again, this one, like Jumia, you have that potential of more than a double if it goes back to its previous high. The stock's at $31. It peaked out around 70. I'm not saying it's going to go back up there, or it may not go back up there immediately. It may not go back up there as fast as it went up here at the beginning of the year. But there's that potential. And it's already gone to a buy signal. Another one under industrial products, under the buy section, is CLIR, clear sign combustion. It's kind of the same thing. This hasn't broken out to a higher high yet, but it's getting real close, and that's a real. If this did go to a lower low right here, it's retraced almost 100% of that move. It's very likely this thing is going higher. And again, on these bowl-shaped moves, you really want to be getting in on the right side of those bowls because they tend to take off. I would assume that this stock is going to work its way up to at least this previous high right here. And then if it does, you definitely have your bull right there. And then what do we just, now it could move sideways and give you the handle, cup with handle formation. But if it breaks out again, you can take the distance of that bull, project it upward, and that's a nice target. So you could have two trades out of this one where you trade it in this area right here up to that previous high, because again, a lot of times you'll get that sideways move that forms the handle of the cup, and that can last a little while sometimes. And I don't necessarily want to hold a stock moving sideways for 2 months or a month or something like that. But then if it breaks out, you have a second trade where it could potentially make that distance of a move. So these are stocks you definitely want to pay attention to when you see that type of pattern forming. And then last one under industrial products and under the buy section here is IPWR, Ideal Power Incorporated, 95 strength rank. But again, you're seeing a very similar pattern here. It had this sharp decline. It looks like it's turning the corner. It's gone back to a buy signal. What I like about this one too is that, again, whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. It's more likely to break out. Now that little rule of thumb I go over all the time does not mean it has to go up in a big way. Okay. Whenever you see a stock moving sideways and the previous move was up, it could just break out of that range and then reverse. So, so don't assume with that saying that it's got to make a big, huge move. But when you combine it with the context of this thing dropping all the way down, looking like it's turning the corner, and then you're getting this formation, you're assuming that in the near term it should move higher, and in the longer term it should be working its way back up towards this previous high. Maybe not a sharp move. It could be more gradual. It doesn't have to be on liftoff like it did right here, but there's potential for it to move back up to those previous highs. Now, another thing to point out is remember, the software is what the software is doing. It's putting you, these are the top sectors out there, okay? That's ranking the top sectors, and then we're going in and we're looking at the individual stocks within those sectors. Is it surprising that we're seeing the same chart formations? So under industrial products, you're seeing a lot of these stocks have been beaten up that are looking like they're turning the corner. That's not coincidental, but that's the power of the software, okay? It's putting you right in front of the stocks that have that potential to be making these big moves higher. And you're not wasting your time trying to sift through 7,000 stocks to try to find. Again, this goes back to, what is our competitive advantage as traders? We're not trying to outsmart the big institutional traders. Because, and some of you, maybe that's your obsession, and good for you and good luck. But these guys spend billions of dollars to make sure that they're going to know stuff before you do, whether it's information, whether it's hiring the smartest people in the world, whether it's devising software programs that can analyze companies better than you and I could ever dream. Let them do that. We're going to get really good at recognizing what they're doing, because they are the ones that are going to be buying enough stock for the stock to move higher. Even if I could outsmart these guys, I can't move the stock higher with my knowledge. I would need them to discover the same thing in order to push the price higher. So we want to get really good at recognizing what the big boys are doing. And all these subtle clues I'm teaching you are recognizing what they're doing, and then we want to jump along and piggyback on them. And the software is that's what it's showing you. It's saying, okay, this is what they're focusing on, these top sectors right now. And then we're going in on those individual stocks. Now, obviously, the ones that are on the buy signal buy side right here, those are already, some of those trends have already taken off. They've already, the big boys have already put their money into those, and sometimes we don't necessarily want to chase those moves. If we can find some of these ones in the hold section that are, or some of the ones that are in the buy section that are just starting, again, that's going to be our competitive advantage, and that's what we're doing right here. And so it's not, I just want to point that out, that it's not coincidental that we're seeing, I don't mean to be repetitive, but we're seeing the same patterns in some of these sectors. It's not coincidental that that's happening. Okay. Now let's go down. We'll do one more sector here real quick. Let's just jump down to computer and technology. Under the hold section here, I like blink charging, BLNK. I brought this one up before, 99 strength rank. You have a little bit of a V-shaped move right here, going back to a buy signal. Now, this would be one that maybe you wait for it to go to a higher high. I thought it was reversing right through here, and it still ended up correcting. It still had another move down. But again, if you can get a little bit of that confirmation of going to another higher high right here, that would be a stronger indication that this thing is turning the corner. Let's see. Let's try MVIS, Microvision, 99 strength rank. Again, you've got a little bit of this bowl shaped. I don't like the breakout higher and then come right back down. That's worrisome. I think this was caught up in the Reddit crowd. You've heard of those Reddit traders they're just retail traders that they're they hype some certain stocks sometimes, and they can tend to jump, but then they come crashing back down. But what I do like is that as it came back down, it's forming a little bit more of that bowl-shaped move, and it's going back to a buy signal. It did kind of give you still a higher low right there, and it might be working its way back up again. All right, let's jump into the trading. I went a little bit long there, but part of that was I was talking for about 5 or 10 minutes, and the audio was out. That's always fun to realize, because I realized I was talking to myself and then for all that time. And the bummer part is that it's not even it doesn't even get it, because of the audio went out. It's not even going to be in the recording. All right, so the trading today is on the three black crows. I want to see if I can pull up a chart where I have a little bit of room to draw. Okay, here. The three black crows is just the opposite of the three white soldiers that we talked about yesterday. Three white soldiers is a bullish formation. This is a bearish formation. The context is important to this. You'd want to see the market or the stock rising. And then what you're looking for is a down day you'd like to see a pretty decent candle. You'd want to see a pretty decent downward candle. You don't want it to be real compact, because compact usually indicates a little bit of indecision. Now, ideally on this one, you'd like to see each of the candles kind of open within the body of the previous day, meaning it maybe gapped up a little bit the next day, but then dropped again. Now, we also talked about, ideally, you'd like to see it close at the lows of the day without these shadows or wicks there. But again, in real life, you're usually going to get some sort of little bit of a wick there. So you just don't want to see a really long wick. You could be okay with a partial wick or shadow, whatever you want to call it. But ideally, you'd like to see it close at the low of the day. So this would kind of be an ideal, and we're going to look at live examples of this, but I just want to kind of draw it out so you understand the concept. This would be kind of the ideal 3 black crows. Again, the next day it tried. You had the first reversal day after an upward move. Second day it tried to open higher and then dropped, closing at the lows of the day. Third day it tried to open higher, closing at the lows of the day. Now remember, the 3 white soldiers and the 3 black crows are indicating a shift in trend. Remember, the one-day candles tend to be very short-term. They might mean that a hammer formation just means that the stock should move up the next day. It doesn't mean that you're going into a new large uptrend. Okay. Now I've talked about this though. Those single-day candles, if you combine them with a larger chart, like an ABC pattern, that if you have a hammer formation showing up in a C wave of an ABC pattern, it could indicate, that combination could indicate you're about to start a larger uptrend or something like that. But usually the individual candles are very short term. These formations tend to predict bigger moves. So a 3 white soldiers is predicting that you could be starting a new uptrend or starting a bullish move. 3 black crows indicates that you could be starting a bigger move down. Okay, and you could have gotten in just on a lot of times when I see a stock that's overextended, overbought, and then I get a bearish reversal candle, which is often going to be that first candle of a 3 black crows, I may short it right there just based off of that bearish reversal candle. But remember, that first candle is very short term. It's saying, yeah, we should move lower, but not saying it's going to start a bigger move. And then you might see it have another big down day, another big down day, and you might realize you got yourself a pretty big trade there. That thing could drop quite a bit from that. Now, another thing I want to point out is that it could be predicting a bigger move down, but especially if you have a really big move down on those 3 black crows, you could, in the near term, get a little bit of a correction from it, meaning that could be a wave A or a wave 1 of a move down, and then immediately it rallies back up a little bit, and then you drop even further. So, be aware that especially if you've made a really big move down off that, you could get a little bit of a bounce. So sometimes I'll see a three black crows. It's moved down a little bit too far for me to chase it right there. I wait for it to rally back up on the bounce, and then I trade the next move down, assuming this was signaling a downtrend is beginning. You wait for that first correction, and then you trade the next move down. Now, do you have to trade in the body of the previous day? No. In fact, you could get a gap down. But again, if you get a gap down, you want it to close near the lows of the day, if possible, to kind of confirm that negative move. A couple of these that formed recently, if we look at Pfizer, so this was a shooting star candlestick formation that formed. It's okay. I don't mind having, especially on the first move down, I don't mind having that wick up here. We close near the lows of the day, and that's a shooting star. That's a bearish reversal formation right there. Next day, it opened in the body of the candle. It gapped up a little bit and then closed near the lows of the day. Third day, opened right at the close of the previous day, closed near the lows of the day. And here it's dropped down a couple more days. Now it's moving a little bit sideways, but whenever you see a stock moving sideways, you want to pay attention to the direction it's moving before it moves sideways. That's where it's more likely to go after it's done moving sideways. This looks like it's in a little bit of a larger downtrend right now. Probably not coincidental that Merck also has one that recently showed up, same sector. Now this is a duplicate day right here. Sometimes it's been showing up a little bit on the software recently. This wasn't 2 days in a row that were exactly the same. That was just those are both the same day. It just a little bit of a duplicate move there. But here was the first day, first bearish reversal, gapped up, closed lower. I trade these all the time, just as potential reversal days. I usually trade them with options, and I trade them very short term, usually like overnight, because very often they're going to go lower the next days at some point. It gapped up the next day actually, but then closed lower. You do want to see on these three black crows that the close is lower than the close of the day before. And then you had another down day right here. There's your three black crows, and it's not surprising this thing is continuing to drop. Here's one on Big C, BIGC, ticker symbol. There's one. Here was the first candle. Again, you want to have the stock moving up before you start to see that reversal. There was a bearish engulfing pattern right there, engulfed the day before. Opened a little bit higher the next day, but closed near the lows of the day. This case, it gapped down the next day, and it came off the lows of the day a little bit. But again, this is where you have to be. If it comes off the lows more than 50%, then usually that's a little bit too much. But it was maybe a third, came off, moved up a third of the move right there off the lows of the day. That's not too bad. But look at that again. It continued to drop. Didn't go straight down. You had a little bit of pauses within the move, but this was signaling a bigger move down. Here's another three black crows right here. There's the first move. There's the second move. Here's the third move. Now this one dropped a little bit further, but then it rebounded from that. Again, you're not always going to get a bigger move down, but keep in mind the context here. We didn't have much of a move up right here. A little bit of a move up. It wasn't like we were at the top of a strong upward move right there. This was a smaller move up. So this one probably wouldn't have been as strong of a signal to me, or I wouldn't have as big expectation that this is going to have a bigger move down because it already made a bigger move down. All right, let's take a look at ZI. Again, not as big a move up right there. Here was the first move. This one came off the lows a little bit, but not more than 50%. Third day, and then it continued to drop off of that. Now, a couple of the things that were in play here, because I know we're looking back in hindsight, and I get it that we're all geniuses and experts in hindsight, and I could sit here and say, oh, it was obvious that it was going to make that move back there, but there are other reasons to believe this thing was going lower. If this was a start of an upward move right here, again, the rule of thumb is that stocks will tend to retrace about 50% of their moves. So that's what kind of creates that stair step. And there is some leeway for it to go a little bit deeper than 50%. like I said, usually it's at 618 retracement level, the Fibonacci level, 61.8% is usually about as far as I would want to see it retrace a move. When you get past the 618 retracement, if you get past the 618 retracement, it becomes more likely you're in a trend reversal, that you're actually most likely going to end up going to a lower, breaking to a lower low. So by the time you got the three black crows right here, you're well beyond a 50% retracement. You're beyond a 618 retracement of that move up. It's becoming more likely that you're going to break to a lower low. You're going to get a bigger move down. So again, when you get all this stuff down that I've been teaching over the months, you can start stacking up different clues, and those clues will start forming probabilities that there'd be a much higher probability that this thing is going to break below this low, that you're going to get a lower low and it's going to move down. Now, remember in the three white soldiers, we also talked about, so the three white soldiers, after a downward move, you get upward day, upward day, upward day. We also said you could get one big up day that kind of, that would basically signal the same thing. You know, you could fit all three of those into that one big up day. The same could be for the downward move here. You know, you get a real big down move. Now, I would want to see that right at a peak, right at the top, where you get a real big down day. You get a one big down day, and that basically is the same thing. It's signaling a bigger move down, although it didn't go down that much further right there. But that's probably because that didn't form right at the peak, right at the top. But if you saw a big, really big candle on a peak or a top, it would basically be saying the same thing. You wouldn't need to have three of them. That's all three of them are in the one day right there. Especially if it closes, you'd want to see it close at the lows of the day, high volume, all that kind of stuff. Let's look at FSLY. I think we have to go back a little bit on this one. Might have to go to, I think it was back in December. Hopefully we can still see it. I think it was right in here. It's hard to see. I was using a different charting service to see some of these patterns, so that was a little bit hard to see. Let's try another one here. Well, actually we can still do it. What we can do here is just zoom into December. Ooh, what happened there? That's weird. I'll skip it. It's too much, too much of a hassle. Let's try. There was one on Apple. Yeah, you can barely see it right here in January. So there was you had the run up right here. You can see it a little bit at the first. It gapped up, sold off. Next day it opened in the body, but then closed out lower. Next day it had a little bit, tails a little bit on both sides, but again it closed lower. You didn't get much of a move down from that, but that was an example there. This one isn't quite an example. I don't like that one because this first day was more than 50% off the lows. Too much of a tail on that one. And then it gapped down, had a big tail up to here. Just too much intraday movement there. But I mean, it did. I'm not saying that still wasn't a bearish price action. It tried to rebound a little bit and had a bigger move down, but I wouldn't quite refer to that one as a real clear. Well, I talked about this yesterday too. You remember there can be different degrees. If there are some of these little tails in the way there, it could still be a bearish price action, but just maybe not as strong as when you're forming a more distinct three black candles, three black pros. All right, we'll leave it at that. I think that's enough of examples there to at least get you to recognize the pattern there. All right, next market update I'm assuming will be next Tuesday. I'm going to be out of town next week, and I don't know what my schedule is going to be like. If for some reason I have to change the class and I'm not able to alert everybody on the change, just remember it's recorded, and so you can review the recording of it. I'm going to try to stick to the main schedule, but I just don't know what my schedule is going to be like next week. So just be aware of that. If you log in and I'm not here, or it's not showing that I'm here, just realize that I probably had something come up and I'm going to have to do it at a different time, but it'll be recorded and you'll be able to view it. So, and that'll just be for next week. It's just going to be kind of a weird thing, and it may not. I might be able to do it at the same time, same day. But we'll just have to see how things go. All right. Thanks, everyone. Have a great weekend, and we'll see you next week. Bye now.